We're at the 2017 Crowd Invest Summit at the LA Convention Center. Today on our show, we've got Jason Paltrowitz, Executive Vice President of OTC Markets, Head of Corporate Services, and Head of Global Business Development. Jason, thanks so much for coming back.
Thanks for having me.
So, Jason, equity crowdfunding has come such a long way, and on OTC Markets, Elio was the first one to list there. Tell us what you've seen in the landscape since that first listing with Elio Motors.
Yeah, it's amazing. It's been 2 years since Elio did their first, or the first Reg A Plus deal on our market. It was a slow start, right? Elio happened and it was kind of slow and everybody said, is this thing gonna work? And here we are 2 years later and the pipeline is strong. We've seen a significant number of deals done, a significant amount of money raised. We're actually starting to see some things which are a little concerning. Just the number of Reg A Plus deals that immediately go to national exchanges, which we don't think is the best for the industry. But ultimately, the whole thing was about ideas getting to capital. And I think irrespective of some of those bumps, I really think it's starting to take off. You're starting to see great little companies use Reg A for what it was intended to get money from the general public. To go public and to grow, right? And ultimately we all benefit from that.
And in OTC Markets, a lot of times people may think it's just emerging growth, but you have some big name companies on OTC Markets. I mean, could you maybe just list some of those?
We do. We're an interesting market because we serve a number of different constituencies. So certainly the early stage growth companies, and we've got thousands of them that begin their life, if you will, on our market, and some of those eventually go and uplist on an exchange. But we're also the home to 70% of all international companies that trade in the United States. So one of the problems with exchanges for small companies and big companies is it's expensive. It's costly, it's complex, there's additional requirements. If you're a large international company, you're already doing what you need to do in your home market. Why do you want to be duplicative? So we've got great Adidas, Roche, Deutsche Telekom, BNP Paribas, Marks & Spencer, Sainsbury, Air Canada, some great global brands that choose to have their security trade on our market, again, to reduce the cost and complexity. We operate a market that's just as liquid, it's transparent to investors, what they're buying and versus an exchange. And so it's a value-added service to help bring some of those great global brands to U.S. investors, not just early-stage U.S. companies.
Definitely, and I mean, OTC Markets has done a great job of facilitating that for companies.
Yeah.
And we've talked about these companies that are doing equity crowdfunding. Why is OTC Markets such a good fit for these companies?
Well, again, I think we should be viewed as the preferred market for early stage and developing companies. When you're a sub 500 million market cap company, and we're talking even lower than that, right? There's a couple things. A, your natural investor base tends to be the self-directed investor, right? So you're not looking at the Fidelities of the world or the Janices of the world. They're really not investing in you. And so you don't need to be on a market that has all of those rules and regulations and those risk mitigants that are designed for that type of investor. The second thing is, and certainly in Reg A+, you're talking about companies that are really early stage, that are funding themselves with $5 million, $10 million. Elio was a $17 million raise. The SEC did a study that the average cost of year one to be on a national exchange is $2.5 million, with $1.5 million every year after that. So if you're raising $5 million, it really doesn't make sense to spend half of that just to go through the rules and regulatory requirements of an exchange that really don't fit the kind of company you are. You want, as the CEO, be spending your time growing your company, right? And hopefully eventually you become the kind of company that does graduate to a national exchange. But to spend all of that time and effort just keeping up, you're running on a treadmill just trying to stay on an exchange. You're doing all of these regulatory regime that really wasn't designed for a small company. It was designed for the S&P 500 type company to risk mitigate for ETF investors. It really doesn't make any sense. So we think we offer a great market, a cost competitive market, a market with much less day-to-day rules and not less rules and regulations. We've got structure, but you don't have to be Sarbanes-Oxley compliant, let's say. You don't have to have a compensation committee. So from a corporate governance perspective, a little lighter touch, and you can focus on growing your business, not staying on an exchange.
Very important point to make, is you're able to help those companies, foster that growth and graduate when the time's right, but the right exchange to build and grow and grow their business.
I'll tell you, we're very proud of the fact that we've graduated over 400 companies to an exchange over the last 5 years. And we're proud of that, helping foster growth in America, right, in the capital markets. But I'll tell you, at the same time, we've seen any number of companies that have come off exchanges, and usually that happens because they went too soon. They weren't ready. You can be kind of the bells and whistles of a bell ringing and saying you're on the NYSE, but there's a commitment there, and you have to be ready for that. And there are a lot of companies that aren't, and it's much rather take some time, and when you get to an exchange, be ready, than have to be the one that comes the other way. And so we spend a lot of time on education and helping companies grow into those great companies, but it takes some time.
Well, there's a lot of information out there. Where can companies and people go to find out more information about that?
OTCMarkets.com is always a great website, so you get a lot of information on the companies that trade, but you also get a lot of information about how the market works, market structure. You get a lot of information about Reg A and crowdfunding. You get a lot of information about slow PO or IPOing on our market. So it's really an educational tool, much more than a marketing or sales tool.
Yeah, it's so important for companies to understand that before they start taking those leaps, of course.
Yeah, it's very easy to just say, oh, go public. And then, after the banker's made his money and the lawyers have made their money, you're the CEO that's left having to kind of be a public company, and there's a lot of responsibility that goes with that. And so we want to make sure those companies are ready.
Definitely. Well, Jason, you've been at these conferences before. You're definitely always been involved from the very beginning. What do you think about this CrowdInvest Summit so far?
It's great. I always love coming to these. I'm also on the board of the Crowdfunding Professional Association, so I spend a lot of time and am passionate about, again, what I said earlier. It's really about bringing ideas to money. And whether it's my work at OTC or on the board of the CFPA, it's how do you break down the barriers to just make that easier, but do it in a way that protects investors and that helps companies grow. And so events like this, if you even behind us, I think is the sponsor list, right? It continues to grow. And that's just a sign of positive momentum in the market.
Growth's been amazing. We can't thank you enough for coming on again.
Always a pleasure. Thank you.
Hope to see you next year.
Yep.
Stay tuned for the next interviews here on InvestorTownhall.com.